Hi, everyone. Um, I decided to take a look at practice problem number 28 on page 377 to help you get through the steps of how to handle borrowing of foreign currency. So I have the answer key up in front of us, obviously, but let's take a look together. April 1st, 2017, Mendoza Company borrowed 500,000 euros for 1 year at an interest rate of 5% per year. Mendoza must make its first interest payment on the loan on April 1st, 2017, and then a second one on March 31st when the loan is repaid. Mendoza prepares U.S. dollar financial statements and has a December 31st year end. Prepare all journal entries related to this foreign currency borrowing, assuming the following exchange rates for 1 euro. So those are our spot rates on the various dates. And now what we must do is determine how do we incorporate them into our journal entries. First of all, whenever we borrow money, we always debit cash and credit notes payable. But we have to convert those 500 euros to dollars. And the day of the loan, 1 euro was $1.10. So we're actually borrowing cash of 500,000 euros times $1.10 per euro, credit notes payable, $550,000. Now with any note payable, the next significant date will be an interest payment date if it happens before the end of the year. And that's the case here. The first interest payment happens on October 1st. So we need to calculate how much interest in dollars we'll actually be paying. Well, we don't calculate it on the $550,000 principal. No, we're paying interest on the euros. So 500,000 euros times a 5% interest rate per year times 6/12 because interest will be paid every 6 months times the conversion rate on the day we're paying the interest, $1.20 per euro. So really, in terms of US dollars, we're paying $15,000 in cash, and that's the debit to interest expense as well. Now, the next interest payment is until March 31st of 2018. Our year ends December 31st. So if you drew a timeline, we would have to calculate and record the amount of interest that's occurred on this loan from October, November, and December, because that just takes us back to Accounting 101. Any interest that accrues on the loan needs to be recorded in the year it occurs. So how much interest accrues? Well, 500,000 euros times 5% interest times 3/12 gives us the amount of euros. Now convert those euros to dollars as of December 31st, and that's $1.24. So interest expense would be debited for the $7,750, interest payable credited for $7,750. Another item we need to look at is, just like when we sell or buy, we need to determine at the end of the year, hey, if we had to pay this loan back at the current conversion rate, would we be paying more, less, or the same? Now in this case, when we borrowed when there's a conversion rate of $1.10. If we had to pay this loan back today, the conversion rate's $1.24. We would be paying 14 cents more per euro because of that conversion rate difference. It costs us more in United States dollars. So take the 14 cents times 500,000. That's a $70,000 foreign exchange loss. And you just calculate it on the principal. So debit foreign exchange loss, 70,000, credit notes payable, 70,000, because if we paid back this loan on December 31st, we would have been paying $620,000, 500,000 times $1.24. After the December 31st journal entry, the final journal entries will occur on March 31st, the day the loan is due. The first thing we must do is pay the interest on this. So, first, let's debit interest expense for the amount of interest that's occurred from January 1st, 2018 through March 31st. 500,000 times 5% times 3/12 times the conversion rate on March 31st, $1.28. So we'll debit interest expense for $8,000. We'll debit interest payable for the amount we accrued at the end of 2017. However, the actual amount of interest for those 3 months at the conversion rate today is $250 higher. We don't record that as interest expense. We record that difference in exchange rate from the 3 months of interest recorded as an expense at December 31st through March 31st as a foreign exchange loss. How much cash are we actually paying? 500,000 euros times 5% times 6/12. That gives us the number of euros. Now convert that to dollars. The conversion rate on March 31st is $1.28, $16,000. Finally, we also need to pay off this loan. How much are we paying off? 500,000 euros times the conversion rate on March 31st of $1.28. $640,000. So that's why we're crediting the cash $640,000. What's the current principal in our note payable? Well, it was the exchange value of the principal as of December 31st, $620,000. Remember, when we borrowed, the value of the loan was $550,000, but as of the end of the year, it increased an additional $70,000 because the conversion rate increased. The difference between the last fair value, if you want the conversion value of the note, and the actual amount we pay off, in this case, is a loss. Why? It represents the difference between the exchange rates at December 31st to March 31st. So it increased 4 cents times 500,000 euros. So that's a foreign exchange loss. So the key to borrowing money, foreign money, is you always have to watch that conversion rate. And for your different transactions, whether it be when you borrow it or you have interest payments or it's the end of the year, you focus on that day's conversion rate. Make sure your interest is stated in terms of that day's conversion rate. Make sure any loss or gain with regards to the note payables principal, because the exchange rate changes, is recorded at the end of the year, as well as the final payment date. So hopefully that little run through there will help you tackle problem number 30 that I asked you to take a look at. If you have any kind of questions, please email me and I'll see you on Monday.